So DraftKings shareholders, how are we doing? I'm doing absolutely fantastic. What a week it's been, and Friday just topped it off with these guys. What a smash. Oh my days, I don't think I have seen DraftKings put in as good numbers of them as they've been public. They were unbelievable earnings, and today, as we normally do, we're going to break down these earnings and just a few things that I pointed out. As always, Jason Robbins always packs a lot of information into the conference calls. There's always a lot of information in the earnings. I've tried to pick out the most points that I can and fit them on the whiteboard. Maybe one day I'll have to get a bigger whiteboard for DraftKings earnings, but we'll go through them here. And yeah, I am absolutely buzzing. Well done to you guys that have been buying these shares in these stupid valuations at $10 and also held on to these shares. You're laughing now. The stock has performed absolutely amazing. And yeah, financially, the company's on fire. So we're going to take a look at what's going on here. I think that at the moment, DraftKings did finish up 10% on the day on Friday. I have to say, I think these earnings, they were so good. I think the stock should have been up over 20% on this day. I wouldn't have even been shocked to see it up over 30% on the day. The numbers were that good. So yeah, as a shareholder, I am impressed, and I'm more than impressed, to be honest with you. It's just absolutely fantastic. And yeah, it's the reason why this is my biggest position, because I've got so much confidence in this business, so much confidence in the management team. It's a proven market in the rest of the world. So why is it not going to be any more successful in the US? In fact, it's probably going to be more successful in the US because it's such a big market. And if anything, I would say the US is a little bit more risk tolerant as well. So yeah, unbelievable. So excited, and yeah, it's absolutely fantastic this quarter. So let's go through DraftKings. Oh my, that Q2 smash was unbelievable. First of all, going into the quarter itself, I was a little bit nervous. We talked about this on Monday. We looked at some of the numbers that analysts were going for. I was nervous. I looked at Q2's analysts and I went, they're quite bullish of them numbers. Saying that we were supposed to be coming in this year growing at 30%. This year, I think the analysts had us down as growing at like 42% in this quarter. And then we come in with, 57% growth. It's absolutely a phenomenal beat. Even from like the EPS side of it, I was like, that's such a better number than last year that analysts are forecasting. And I thought even this year going in, I thought, it's quite a hard numbers to beat. And one of the key things is also because you got to imagine as well, we're going in this quarter with hard comps, because when you go 12 months ago, what did you have? Well, so you had the NBA. I think there was 40 games of the NBA in this quarter. I think last year there was 200. Just double check their numbers on what was said actually. But as well as that, as more NBA games, I think as well as that there was the Euros, I believe, last year, and obviously you didn't have that this year, and that also helps the business do quite well. So yeah, it was also that tough comparison that was coming in, and also there was the kind of other things. They had Ontario launch, they had New York launch, GNOG acquisition as well. So there's a lot of unpredicting factors kind of coming in here, and then what we saw is that they didn't have the numbers that dragged down because of the launches or the acquisition, and also the revenue, even with the more sporting favourable season last year, it didn't really affect it as well. So it was absolutely unbelievable. EPS 0.29 versus 0.83, massive beat. I think this was one of the key things for me this quarter, is going, we do always expect revenue to be pretty strong, but it was really looking at how that profitability was starting to ramp up. And yeah, we're not profitability yet, but the kind of clear path that them states that have been the longer launching states now, that we have a big list of states that have been launched, that them states are really dragging that profit and helping them losses. And the more them states mature, and the more we have the newer states mature, how much profitability is that going to drag into the business? Because we're starting to see that effect starting to come in now, which is really impressive. Revenue was 466 million versus 436 million, so 30 million beat there in revenue, which is once again absolutely fantastic. They hiked up the outlook as well. We had a triple beat, which is absolutely amazing. A triple beat normally takes you up at least 10%, so I'm disappointed to see it only 10% up when you look at the factor of how beaten down this stock is. Revenue hike, which was good. I've got to say though that it's still short of my target for this year. My target is for them to hit 2.3 billion. So we'll see if they still do it. At the moment, the outlook is still a little bit below that. There's still time though. We'll see what happens. EBIT as well, they moved into a range of a loss of 765 million to 835 million. That was from 810 million to 910 million. So that was a massive move down as well. And let's not forget, I think it might have been Q1 or Q4 there was one of those quarters that they came out and they moved their EBITDA down a little bit, and the stock like got punished 20% on the day. Some of you guys that have been in DraftKings for longer than 6 months, you might remember that quarter, is that the stock got absolutely dragged down that day. And since that time frame, it must have been Q4, because it must have been Q1 they came out and they said, oh, actually we're going back to our old EBITDA targets, we're actually doing okay. And then in this quarter they actually went, actually we're going to even improve them even more. Now considering that had a 20% effect on the share price, and now that we're actually even higher on them targets, because like we said earlier, there's a lot of synergies coming in with like the GNOG acquisition and the more coming in national brand, and they're saving money through advertising because they're actually allowed to do like national advertising now rather than local advertising, which is cheaper, and also like synergies like the GNOG advertisement savings that they're having as well. Obviously that's helping as well, so that's absolutely amazing. Monthly active users were still really strong, 30%. It sounded like a lot of the mature states as well still had very good growth. Average revenue per user, or MUPs, was still very strong at 30% growth. Now you'd think right now in this sort of quarter you would not have that sort of growth, but the fact that people are coming onto this platform and using more and more money, absolutely fantastic. There was a little bit of caution out there thrown to Q3. There was a suggestion that Q3 could be a big wide result here. They said that it's going to be massively different because of the hold, and they said that it was a little bit of a warning going into Q3 that it could be quite volatile, because basically in Q3 we get 3 weeks of the NFL season, which is obviously massive for DraftKings. Obviously that will be more important in Q4 and Q1. But we do get 3 weeks of the NFL season. Now, them 3 weeks of that NFL season will dramatically, over a longer period of time, the hold is okay, because what you tend to happen is it levels out on the kind of the underdogs winning. But in them 3 weeks, if the underdogs don't win, then we could have results in Q3 that aren't as nice as what we've had here, so something to be careful of. But you know, in Q4 and Q1 that'll be okay. At the same time, it could dramatically look quite well if the hold is, you know, if an underdog wins, let's say, all 3 weeks. So there was a little bit of point out on that, just be careful going into Q3. It did say that there's going to be some new states that we know about, which is Maryland, Ohio, Kansas, Puerto Rico and Massachusetts. The bill has passed. There's also going to be the voting on November the 8th for Cali, which will also be a massive state if we do get that there. So just some things to keep an eye on there. They did say that they have enough cash to be free cash flow positive. They do not need to raise any capital, which is something that we've heard before, but they just kind of once again saying that, you know, a lot of the criticism they have is like, oh, you know, DraftKings don't have enough cash, they're going to go bankrupt. Once again, they're saying, look, we've worked it out, even worst case scenarios, you know, and I've got to say as well, on this point, one thing that a few people are saying is, oh, how are DraftKings going to perform in an inflation environment? You know, people are going to stop spending money on DraftKings, and that kind of got blown out of the water as well. But yeah, you know, a few people say, oh, they won't have enough cash and all that. I said, no, we're going to be okay. We're still sitting on 1.5 billion on the balance sheet as well. And, you know, I think even it was the last conference call, or it was the investor day, Jason Robbins, I've got to say as well, it's so confusing, because when you've got the CEO called Jason Robbins and the CFO is Jason Parks, I think it is, but they're both called Jason, and literally when Jason's been, you're like, okay, was that Jason Robin? You know, you're like trying to keep up with it. But yeah, going back to the point anyway, that was a pointless point. Going to an actual real point here. Yeah, they've got enough cash here, which obviously is great, 1.5 billion in cash, and really that them, you know, Jason Robbins said that, you know, end of the day, if we did ever struggle for cash, you know, look at how much we spend at marketing. We'd just stop marketing and we'd be making profit and won't need to raise any more cash, which is also so, you know, so true. He said that 2023 costs will start moderating. They've now reached the peak amounts of losses, and now losses will start decreasing, which we did expect from them, but also they're just confirming that they've kind of reached peak scale now. And also because we're going to have, you know, them states that have matured here, creating that amount of profitability that will start funding the business for the rest of the growth, which, by the way, we've still got mass amounts of growth, because I think even with like Cali in there, I think it's Cali, or it's either Kansas, Puerto Rico, Ohio and Maryland, that's still going to be like only 44% of the population, so there's still massive amounts of growth still to be there. They're still saying they're on the target for 10 states to be contribute profit by the end of the year. I mean, it would be so impressive if they actually push that to like 11 or 12. That would be, you know, unbelievable if they did achieve that. So yeah, something to keep an eye on there. Obviously, 10 states that contribute to profit will be absolutely huge. You know, that people really need to understand the story here. Like, it's a proven business model. You know, you look at the first state that launched in New Jersey to where they're at now, every single state that they've launched, they all achieve profitability in 2 to 3 years, and it just continues to happen. And the losses one day, you were starting to get close to that time period now. We've moved past the peak cycle now. One day, all these states that are coming profitable are just going to keep contributing, and you're just going to see one day analysts and Wall Street will go, oh, actually, they are starting to put really good amounts of profit in now. It's a proven track record here is what I'm trying to say. They did say in 2020, in the next conference call, Q3, they're going to set out the targets for 2023. So they'll talk more about what they expect on revenue growth, on EBITDA point of view as well. They did come in with gross margins of 41%, which was a bit of an increase. It would still be a bit better if they can get this a little bit higher, which they did say they are going to aim to get this higher, and it will improve going forward. Obviously, there's still a few costs at the moment, and also going into Q3, you will see the gross margins slide down a little bit with the launch of the NFL season and potentially some new state launches, but still pretty good improvement there, and there's still a lot of room to carry on improving as well as we mature going forward. So yeah, I have no idea how long this video has gone on for, but those are all some of the key points that I got from the DraftKings earnings anyway. There was a few more, but I tried to put the main ones on the board anyway that I noticed. But yeah, there was a lot. It was a good conference call, good earnings, 10 out of 10 earnings. If I could give 11 out of 10, I probably would. It's probably the best earnings I've seen from DraftKings, just because it had everything that you wanted to hear from EBITDA, revenue point of view, outlook hikes, monthly active users, ARPU maps, or MUPs should I say. It was just absolutely fantastic, and I think it's just one of those that if you're a DraftKings shareholder, you just went, nice one, just keep smashing it. And it kind of goes back to that tweet that Jason Robbins put out a few months ago where he was like, don't worry, DraftKings shareholders, you're going to miss out on something big if you're not part of this story right now. And I think it was one of those quarters that you can see what's building here as well. And I think it's just a proven model. When you look at the amount of states that are now getting to profitability, it's a proven model that it's going to be successful, and it's just exciting. So yeah, fantastic. I'm buzzing. So I hope you enjoyed it. Well done to you, DraftKings shareholders, and I'll catch you in a bit.